It's a new episode of Bazaar. I'm your host Sid, and today we're going to be talking about most space and defense stocks. Uh, in the last episode, we spoke about L&T and HAL and how they could be big beneficiaries of the boom in India's space sector. However, these companies are already pretty massive. These are stable businesses, and the probability to make supernatural returns or what we call multi-bagger returns are quite low. Like you might make 30-40% with L&T, or maybe even 1x 2x 2x 3x return with HAL. But when we talk multi-bagger, we are talking about like 10x 100x. That is pretty difficult with stocks like L&T and HAL, because these are already so big, right? They've already like delivered I think multi-bagger returns already. So in this episode I'm going to talk about one company which is relatively small in market cap and could grow significantly in the next decade or so. Like it's already been run up, like it's already very expensive right now. I think it's trading at a PE of 170. But when the opportunity comes, and if you get a level where you can enter into the stock, I believe that the opportunity is good. So the company that I'm talking about is Centum Electronics. The company is an electronics manufacturer and technology solutions provider, and it has a good presence in India's space sector. So with respect to the recent mission, Centum delivered more than 200 mission critical modules and systems for the Chandrayaan 3 mission, which is pretty good. I mean, 200 modules overall for the mission. So it shows that ISRO believes in this company, and they might have ISRO as a sticky customer. Like once you have government contracts and if you can deliver, then it's like recurring business for you. So it not only caters to the space segment, but it also operates in other sectors like defense, transportation, aerospace, energy, and infra. So caters to a wide variety of sectors, and it's just not a defense or space play, which is again a good thing working for Centum. And Centum covers the entire ecosystem of electronics manufacturing. So let's say that you're a company that wants to manufacture an electronics product. You already have a design, but you don't want to invest in setting up your own SMT line, or you don't want to invest in setting up your own manufacturing line. So you go with the design and you then give it to Centum. Then Centum helps you with manufacturing that product, and they also help you in taking a product to mass production, like not only prototypes and like small sample productions, but if you want to go to mass production, Centum helps you with that. And one more thing which is really good is that even if you don't have the design, like let's say you don't have your own design, right? You contact Centum, they can build the design for you. So they cover the entire ecosystem from design, manufacturing, mass production. All you need to do is just obviously you need to pay them, but Centum helps you and covers the entire ecosystem when it comes to electronics manufacturing. And they have R&D capabilities in electronics, hardware, embedded software, power electronics, and radio frequency products, and many more. Like I read about it, there were many other things that I could not understand, but electronics manufacturing is a vast segment. It's growing really quick, and Centum can design and manufacture all of these and more. Let's look at some of the things that are working for Centum, right? So firstly, the industry that Centum is operating in is growing pretty quick. Like the EMS industry in India and even globally is booming right now, and you can see more manufacturing happening in India, like iPhone production. Google is coming here now, and there's a lot of electronics manufacturing happening in India, and the EMS industry is expected to be worth around 100 billion in the next 5 years. So there's like a big opportunity. Obviously there are many other players, like Sirma is there, you've got Keynes. I think there are many EMS players right now in the market. Avalon is there, Elin is another small cap player. So it's not that Centum does not have the competition, but it's a growing industry, and there could be a lot of winners who could chuck into the market share. So Centum has that going for it. There's a lot of industry tailwinds right now, and Centum has more than 25 years of experience in this industry. So that gives them the domain expertise, and they could be big beneficiaries of this of the growth in the industry. Now, apart from that, they also have a healthy revenue mix from various industries. So, Centum is not only dependent on the space sector or the defense sector, but also derives revenues from transportation, energy, and it makes 75% of its revenues from the export market, which shows that it also has international capabilities. Like, it's not only just it's making a lot of money from the international customers, and it shows that even internationally, where the standards are quite stringent, Centum is able to deliver. So that is a thing which gives confidence as an investor, that when there is export revenue which is more than domestic revenue, it's a good thing. And apart from that, so it has an order book of more than 1500 crore, which is around 1.6 times the FY23 revenues, and that gives a good visibility into the future. Like, 1.6 times, it gives you a visibility that, okay, I mean, look, at least they'll be able to grow their revenue a little bit, right? I mean, 1500 CR, 1.6 times the previous year revenue is not very, very impressive, because they I mean they it doesn't give you that confidence that they'll be able to double their revenue, right? Or maybe just deliver like 50% year on year growth, but it's a decent order book. That brings us to points which you should know, which signifies weakness in the business or in the financials. So first is the operating margins. Now, the company says that it has 25 plus years of domain expertise, but when you read that, you think they would be able to command a premium for their manufacturing, right? I mean, in 25 years, you would build a very robust pipeline of services, of customers, and you would have good amount of margins from them. Like, maybe you might be able to extract good amount of premium for your expertise, right? But the operating margins have been in the range of 8 to 9% for the past 3 years, which shows that increasing margins and profits has not been easy for Centum, right? Second, players in the EMS industry have to continuously invest in capacity expansion. Like, it's a capital intensive industry, which means that you have to be extremely prudent on how you allocate your capital. And the key metric to look for is return on capital employed. So a higher ratio means that you're pretty good in managing your money, and Centum's return on capital employed has been around 6 to 8% for the past 3 years, which is not very impressive. Like, they might as well just kept their money in a bank account, in a FD, right? FD deposit, and might be able to make like 6.5% in today's interest rate scenario. So that return on capital is not very impressive, which is a requirement when it comes to EMS industry, that determines, like, how competitive you can be with your peers. So that's something which is something that the investors should know. And sales growth has been quite stagnant. They're generating like 75% of revenues from export. Again, these markets, US, UK, themselves are experiencing a long drawn recession, so that could significantly impact the revenues in the future for the company. And at a PE of 170, I think the stock looks extremely expensive. I think with the low sales growth, low return on capital employed, and low operating margins, I would suggest the listeners to keep the stock in the watch list, because it's not that the stock does not have potential. It does have potential. It is operating in an industry which is growing very quick. It's a big opportunity. They have sticky customers. They have a good order book, good expertise when it comes to the domain. And electronics manufacturing is growing in India. So it's a stock which is worthwhile to keep in your watch list, but definitely very expensive at this level. And I would say to at least track the next few quarters before you take any decision. So that's my take on the stock, and I would love to know what you think. Like, if you know about this company, or if you read anything about this company, what do you guys think? And that brings us to the end of this podcast. Like always, do your own research before you buy or sell any stock. I am not a registered investment advisor, and all the information here is for purely educational purposes. Like, it's kind of a revision for me too. So keep learning and keep crushing it. We will catch you in the next episode.